What's happening with cooking oil, as you mentioned earlier, is China used to be a pretty significant exporter to the U.S. Now, the Trump administration cut that off a little bit, partly to support the U.S. soybean market. What's really happening this year is China has not taken any soybeans in harvest. It's really odd. Now, Trump has called it an economically hostile act. It's actually, for Chinese, who are very good traders, it's actually economically irrational, because Chinese soybeans in the U.S. right now are about 15% the average price of a soybean in Brazil. It's harvest, plenty of supply coming on. They haven't, they have soybeans left over for last year. And the Chinese have always been good traders. They usually buy the cheapest price, but they're willing to pay a higher price, I think, to kind of just get back at Mr. Trump with his trade war.
Yeah, I mean, it's long-term strategy here as far as China's concerned, or the way that they would put it. In reading the story about this threat on cooking oil, I noticed that there's something called UCO, used cooking oil, and how it's a flashpoint. What is used cooking oil, and how is that different from regular cooking oil, or is that what we're dealing with when we discuss cooking oil? I mean, just the fact that it's used is fascinating to me.
Well, it's used, and it's a primary feedstock for biofuel. And that's what's really happened in the U.S. There's one thing that we've done in this country, and most notably through ethanol, Scarlett, is we create a net energy exporter, and we create enough energy, and a lot of it's because we use our food for fuel. Now, to put that in context, before the the proliferation of automobile, a lot of our crops was used for transportation through feeding animals, so horses. So it's just coming back around. But the significance is we have major pressure on U.S. soybean prices because of massive supply out of Brazil, and China's world's largest demand pull source of soybeans are taking Brazilian soybeans. So in the U.S., we're looking for sources of demand. How about biofuels? My uncle, who's a farmer, Dennis Shannon, used to like to say, you could put soybean oil straight into your diesel tractor at 5% and run it no problem. So it's a great source. And so that's why soybean oil this year is up about 27%. Soybeans are flat, and soybean meal's down about 10%. We just need more demand pull for our soybeans. And maybe that means we can use that soybeans rather than some of this renewable fuel from, the used cooking oil from China.
So if we're having good crops, good soybean crops here in the U.S., and China is not buying it, what's that mean for our farmers?
Pressure's lower. It's really hurting farmers right now. So they had the best of all worlds, unfortunately, after Russia invaded Ukraine and pumped prices very high, created a lot of profits, 22, 23, a little 24. Now they're really getting hammered. Prices are going down because they're creating more with less every day. We just brought in all that excess supply, incentivized a lot of supply out of South America. So they're getting hammered now, and they're looking for sources. Trump administration started to help them. But right now we have corn around $4 a bushel. Probably has to stay low for a while, unfortunately. The average cost of production is around $3.70. We have soybeans around $10 a bushel. Probably has to stay a little lower. Unfortunately, shut off those excesses of supply, and that's the problem. Farmers are getting hurt now with these low prices.
Which is so interesting, given that they're such a big constituent of President Trump, and he's talked a lot about making sure that they're taken care of. Mike, Paul had talked about how you are the go-to guy for all things gold, silver, as well as Bitcoin. So I wanted to get your take on what's going on in crypto, because we're a few days removed from that big crypto crash on Friday and Saturday. And things are settling it down a little bit here, but we are seeing Bitcoin slide for a second straight day. What kind of damage has that crash done to this space overall?
Scarlett, I appreciate you mentioning it, because in June I wrote about Bitcoin and cryptos could lead the next U.S. recession by going down and creating a reverse wealth effect. And I reiterated that today. Bitcoin has 1929-like qualities right now. It looks like it's heading lower. We have massive excess supply in cryptos. There was one in 2009. And now, based on CoinMarketCap.com, there's 25 million. A lot of excesses. It looks like they're starting to hit lower. So the key thing I've been watching over time, really like to watch, is the ratio of ounces of gold per Bitcoin. The high this year was around 38. Now it's ticking down around 26. Our model, Josh Daniels on our team, says we have a model, looks like the average price could be around 15, means it could still cut in half versus gold. And here's the key thing to remember. There's 25 million cryptocurrencies, unlimited supply, and there's only 4 precious metals, gold, silver, platinum, and palladium, and the average of precious metals this year up about 60 to 70%. That could continue. Limited supply, more demand, massive excess supply in cryptocurrencies, and just a little bit too much speculation.